Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by the lab today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. And this stream's about integrating Bookmap order flow tools with auction market theory using a tool called the volume profile in the intraday developing time frame. And again, thanks for visiting. Could I please have a audio and screen check in YouTube and also the Bookmap Discord Trader Lab chat? Having just a little trouble here. One moment. Still having some trouble. Okay, great. Thanks. Everyone, remember, please, I'm streaming from Costa Rica, and we do have a bit of a infrastructure roulette. So if the stream goes down in YouTube, there's a link in the bottom of YouTube. You can go to the Bookmap Discord chat, jump in there, come over to Trader Lab, and if the internet comes back up, I should be able to reconnect in the Discord channel in the Trader Lab. You don't have to be a Bookmap subscriber. You won't be solicited. I just want you to know there's a backup, and I do not know if I would be able to get back into YouTube since it's a little more unforgiving. Okay, and good morning, everyone. So I have a lot to cover today. Grab your pen and paper. I'm going to be moving as quick as I can. So to get the most out of the time you invest, take some notes, write down some levels, which I'm going to give you. I'm going to again jump into the higher time frame and then go down a little bit into a shorter time frame and then the microstructure and using Bookmap with structured trades that are available to all of you in the Bookmap Discord Trader Lab chat. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Now, did you grab that pen and paper? Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is for educational purposes only. All the trades that I share here and I review are based on structured trades. They're all available to you. There's no cost. I'm not a vendor, etc. It's all free in the Bookmap Trader Lab, and you can follow. If you download, there's 60 PDFs. You can reverse engineer these, and my objective here is not to suggest that you trade anything you see in this stream, that you take what you see, you reverse engineer it, and see if you can develop a statistical edge. The business of trading is built, in my opinion, on gaming theory, not prediction. If you accept that the market is random, the randomness is created by the other participant interaction. They have their own agendas, their own time frames, and everything else. Algos, market maker, hedging, you name it, higher time frame participants, and scalpers and computer algorithms. It's all in the mix. Throw in economic reports and a little salt and pepper, and you get the idea. Nobody can predict the interaction of other participants, just like the casinos. So how do casinos extract dollars from the gamblers? They only play games that have a statistical edge, and they play them exactly the same way. Gaming is played with something called anchored inputs. Gamblers gamble with random inputs in a random environment. The casinos don't do that. Let me ask you, who's building bigger properties, the gamblers or the casinos? Case closed. So maybe we should emulate a a successful business process. This is what the Trader Lab is built on, and it's a community of like-minded traders looking to leverage their collective experience. So grab your pen and paper. I'm going to give you a couple notes. This is auction market theory. Auction market theory is very simple. It is shopping. And you go, really? Trading is shopping? Yes. If a price is too high in a store, you will not pay it. If the price goes on sale, you might throw two in the shopping cart. That's what creates too high, too low. The other part of that is inside of this rotation of too high, too low is high volume. It's some location in there. That is a retail price. If you go to store, can of tuna is $1, it goes to $1.50. You may say, I'm not paying that. And you leave the store if you need tuna. If the price goes down to 75 cents, it's on sale, you may buy it. Well, if the sellers see their inventory being consumed, they can raise their price. This is what causes your rotations. Now, the next piece of this is it happens in all fractals or time frames. I do not trade in time because many years ago, just like you, I used time frames, and I figured out that what I see is not based on the clock, it's based on participant behavior. So you're going to see some ideas here that might be a little different. And there's not a right or wrong to this. It's what you can vet and creates an edge. And if you don't know what an edge is, come to Trader Lab. An edge is the way the game is played in the casinos. This is a higher time frame chart. Call it the intermediate or higher time frame, and that's defined what your perception of time frame is. These are RTH candles. It's the only thing that is time-based that I use. And what these do is what I'm looking at is the volume inside of these days. And it only matters when they overlap because basically that's showing us two-sided trade. Now, yesterday, if you followed the stream, I was looking for a breakout to the downside to take out the stops at the previous day's low right here. And to me, it's not a big deal whether or not the market does something. It's, do I have a plan? And then if I have a plan, my job is to follow the plan. That's because it's like in the casinos. If a plan doesn't play out and it's all random, I don't know what's going to happen. And I'm going to suggest maybe you don't know what's going to happen. We only can know what might happen, and then, as they say, act accordingly. So our target yesterday was sellers, take the stops out on the this is yesterday, by the way. Take out the stops under here. You could see we got close, and then our next target was 67.75. Does everybody remember that from yesterday? If you were following the stream, you might. If you didn't, well, welcome. Now, here's the next piece. If I draw a composite, and this is called a micro composite, all it is putting days together. That's all it is. The high volume for these 2 days was at 48.8350-ish. I say ish because it could, it can be anything. And the highest volume for yesterday was at the same price, basically. So pretty much what this is saying is retail. Now, a funny thing happened on the way to the forum yesterday. We had Netflix earnings. Now, remember, we're looking for this. I mean, think of the logic in all this. What are the probabilities if the market has run up and we have longs in the market, we gap higher, we run up, we get our sellers, and sell stops are under here, that if we open and come down, that we won't take the stops at least. So that's why that was a target and this is a target. I just want you to know the rationale for yesterday's leaning to the short side. But here's what happened. And this is the joy of trading. I'm going to suggest, maybe, let me just see if I can move something. Okay, let me show you something here. And then we're going to get in today. I want to show you something that's very interesting. This is yesterday's RTH. And if you remember in the stream, We had this as a low volume area. In other words, outside edge of the previous day's consolidation. So this is day before yesterday, okay? I think. I got so many things going on here. And this was the low of that day. This is what I was looking to get taken out. Now, this is a Renko chart. It's not time-based, and I just use this because, remember, I don't deal with the clock. Because I want to see the behavior of the participants. I don't want it broken up by some arbitrary time. And this was our target. So this is at 67. This is the previous low of the day. So here's how this worked. We opened. This is the outside edge. This was too high. So this was rejected. This is the day before yesterday. This is a distribution. I'm not paying that. Yeah, but it's on sale. Retail, remember? And if I reject this, I open here and I test it. It's also called value area high. This becomes the current high of the day. And then it was short. If you were in the Trader Lab and you're in the stream, and then of course in the Trader Lab, it was selling, looking for the stops, right? And then that was the lay of the land. Now, we had a small thing happen yesterday. You do remember Netflix. And, I just trade a plan, and I don't know what's going to happen, so it's not my job to predict. Remember, I'm not in the prediction business. The casinos can't predict the outcome of the next hand either. I guess we're kind of similar. That's called gaming. But I do play statistics, so statistically, this had a high probability. And it doesn't have to do anything. But when something doesn't do something, and you don't know, of course, until hindsight, then your antenna needs to go up. Now, there is a 90%-ish probability that will take out either the first hour's high or low. And so we were looking for it, and this is called the IB, initial balance. It's this yellow line yesterday. So we're looking for this, and we did that. So far, everything was going south and going well. This is the IB high. Now, here's where things change. I want you to see the change. And I did not narrate this in the Trader Lab. I was already doing some other things at this point. I was done. But I want you to see a long trade. This is, and you're going to see me do the same stuff today. This was the first hour high. Now, typically what happens is when we come out of the first hour low, we have the potential for continuation lower, especially with these stops. So I just want you to see why the sell thing was going on. But this, I'm going to open this up. And it's important so you can see context. Because if you don't understand context, and by the way, context is fluid, it changes, and who knows? That's part of the joy. So right in here, this level here, I call them variable high volume nodes. It's here, right there, that little, it's hard to see it, I think, but it's right there. And by the way, I can't see if you're asking questions or commenting, I cannot see the chat because everything is covered up at the moment, and I will when I clear IRT out of here, I'll be able to see if you have questions. Thanks for your patience. This was the last area that was too high. This is called developing volume point of control. You'll notice as it's shifting down, the market is going lower. This is a suggestion that everything above is too high. So that's why the short side. Now watch. Market's coming down. This is developing volume point of control. It's saying everything above is too high. When we come back above it, I call this a warning Will Robinson moment. And that's like, maybe this is too low right here. But there's no way to know because we might just rotate up. This is the joy. And then reverse and come back down to it and check it. So once we crossed above, then we have rejected this. And now this is called coming back into balance. Now there's a couple trades in the Trader Lab. Now I call this the IB failure. It is not qualified in my trade plan. The IB failure is a mean reversion trade, but because the volume point of control was here, I had no long. So I had no long out of here, only get out of Dodge. Now we do have a long trade, subject to your plan. When we cross above this, which was our level that was too high, the shorts in this leg now are offside, so there's buy stops. And of course, we had the report. Isn't that joyous? Let me show you the log, and then I'll move on. I just want you to see the structure. This is the IB high. In other words, first hour's high. We took out the first hour's low. There's about a 29% probability-ish, past performance not indicative of future results, that we take out both sides. When this happens, we break out and we pull back to the IB. This is called the IB continuation trade. It is a Trader Lab structured long, and you can kind of see where that goes, okay? And so that's, there it is. That's life in the fast lane. So that's a Trader Lab long. I did not participate in that. I was already done. Okay? Now I'm going to get rid of this and get to today's open. And let me just make sure I do cover one other thing. This is 49.13. This was a target, 49.06, from my intermediate time frame all the way back a couple of eons ago. 49.13 is a target coming up, which we gapped. 49.19 is the current retail price. 49.31 is called a low volume node in a high time frame. It's an outside edge. For us to move higher, we need to take this out. So we have, now I'm going to show you the trades, but you wrote these down. And I apologize if I hope you find this useful. It's kind of important to me to know that this is material for you. Let me get this out of here. And I'm going to get the chats back up so I can kind of see what's going on. Are you guys tracking? How we doing? And of course, the next question is, are you conscious? Did you get something out of this overview? And I know it takes time. But I kind of think, see, one of the things in the Trader Lab, among many things actually, is about the business of trading. The business of trading is not sitting down at slot machine. I mean, it's okay if you want to do that, but I always suggest go to casino, get the cocktails and the coupon to the buffet. Enjoy yourself. It's entertainment. It's not business. In the business of trading, it's trade plans and statistics and having an edge. And only interacting where you have a edge. You can always add pieces, but if you're in a hurry, meet FOMO, and that'll take you out of the business. So RTH open. Now the levels I referred to, there's your high volume. Remember I said low volume node, 49.31. See, now it all makes sense, maybe. Naked volume point of control, 49.13. That was an open target. Overnight volume point of control, ETH retail. Remember retail. What's too high? What's too low? Retail. So that's retail. So now let's look at the first trades. Now let's think. I don't know what, there was a TV program many years back. I'm going to show my age a little bit. And it would be put your thinking cap on. Let's put our thinking caps on for a moment. We had Netflix come out and the market rocketed off it. Now, we got to think about behavior, typical behavior, okay? If the market opens higher and you've been long in this leg going up, there's probably a bit of euphoria running around in your brain. And what might you do? Is it possible that you might respond to the higher open and take profits? Let's think about it. Longs in the big up day, failure to take out yesterday's low by what? Point and a half or something like that. The planet is long if you're long, right? Shorts in the squeezatoria, jumping out the window, that's just proverbially. And so what would you do? Would you buy? Or would you take dollars off the table? What would you do? YouTube? What would you do? Think like a retail trader. Don't act like one. YouTube? What would you do? Would you get long on the gap? TP? Not sure what TP is. Take profit. No longs. Okay. No. Fred just says no. I get it, Fred. Thank you. How about in the Trader Lab? What would you do? Did anybody in the Trader Lab get long? Probably you won't tell me if you did. Trader Lab, what is the plan for this? Tony, we got to talk. Take profit. Here's what it's called. Write this down. Responsive selling. And it's what it is. I mean, we don't know. That's right, demo trader. Responsive selling. And of course, nobody knows. But in the Trader Lab, we have structured trades. So we would anticipate to participate. You need to anticipate. That's what the trade plan is. Remember, we're like the casinos. We can't predict anything, but we can anticipate behavior. Think about a chess game. When you play chess, if you've ever played the game, and probably some of you guys have, or most of you, when you make a move, you are making the move in anticipation of drawing your opponent into something. When we see a move, we anticipate a few possibilities, then we make our move. It's kind of the same thing. Then we want to look at the language of the market. So let's go take a look. Let's look at the open of RTH and see. Now we have a gap. Here's the open. Let's watch. ETH high. That's a high probability target. Are we going to go there first? You ask. So do I. Well, let's think about this. How might we measure this short-term behavior in a microstructure? This is where Bookmap, order flow, sense of smell, and structured trading comes in. The sense of smell, that's something else. So let's look. RTH open. Liquidity sitting in the book, which may or may not be material. Remember, you know what liquidity is. It's like a banana peel. It's very slippery. It can just pull or stack. You don't know. This yellow line is called developing volume point of control. It's a term from market profile world. And basically, the point of control is where the high volume is. Since we're using volume profile, it represents volume. So when this opens at RTH, it starts at 0. So it starts at 0, and the yellow line is tracking. All a volume profile is, it's really simple, it's price and volume. But remember, as a shopper, you go to the store, doesn't volume tell us what's a fair price? Because people, participants are willing to buy it at that price, and the seller's willing to sell it. The thing about it is, in an auction, this thing's going to move around. And we can use it as a gauge to potentially underline, and it's, remember, everything in the world of trading is random in the sense of maybe. So it's really just like the casinos. We don't know what comes out of the deck. We don't know how the gamblers play it. We don't know if the gamblers walk out with cash or the house gets the cash. Welcome to trading. So this is retail. So now I see some selling. This is delta, the red bubbles. Okay, so green bubble buy delta, so aggressors. All right, buy stops. Just showing what's here. Sell iceberg. All right, and so let's watch. Very slow, because the first trade comes very quickly. So let's watch. Breakdown volume. So look at this as a consolidation. I'm taking you into micro world. There's the volume there. Now it takes skill. And how do you develop skill? Practice to do this. You don't just come to Trader Lab and do this and expect a good outcome. Now, watch. This is called VPOC migration. I made these up because when I developed this for myself, nobody was doing this. I mean, if they were, there was no internet. I mean, there really wasn't what we have today, you know, back in the Stone Age. So when I started doing this, I didn't, you know, everything's accidental. You know, I looked at this and I went, that's interesting. Look at that. High volume here. And I started thinking of it like an auction or gaming, or what does it say? See, most retail traders are using indicators as a translator, you know, like Google Translate, right? Basically, this is language. So if you remove the indicator, can you learn to speak market? It's very simple. So instead of having a backwards derivative of price, I have a real-time representation of behavior based on the participant. So let's look at this thing. So the short, right? How do you do this? Well, we come down, we test too high, and it's a suspect right here. I rotate up. This is too high. Right there. Now I test this one. Is this too high? I see my seller again. I want to get short. Now let's watch. Pull back. So this is a short, and actually this is a short if you're very aggressive. And your stop is right here or above here. Because this, you notice this? They're adding up here. That creates pressure in the book. Let's just watch. Watch. This now, so too high, so short. I can't sell it here. I'd love to, but it's not my thing. I can't. But this tells me if that is too high, and now this is retail, at the moment, buyers aren't willing to pay this. This is what it says. That's too high. I'm not paying that. Now, this test here, it can come back here. I mean, it can do anything, you know, right? So let's not worry about predicting. I gave up on that a long time ago because I was, you know, my outcome was random. And the thing we tend to do as retail traders is randomness is like gambling. You win. Gamblers get paid. That's why they come back to the table. But over time, they lose. So picking high lows and predicting everything is, yeah, you get it right. And the natural tendency for retail traders who don't understand gaming theory is to tweak and tune. And that's basically curve fitting. And it's really nice in hindsight. It doesn't work in the real world because the market's dynamic, in my opinion. And that's based on system design and almost 44 years of doing this. But it's just an opinion. You know, you can do it differently, then it's fine, you know. So too high, short, come back to mid and VWAP, also a potential short, stop over the high of the day or here. So that's your short. Now let's go down the ramp a little bit here and look at targeting. Because you got to know, right? Where are we headed? And again, nobody knows. Overnight volume point of control, which was retail. So in the microstructure, too high, what's the last retail price? Think of shopping in fractals or multiple time frames. This is retail, and this was retail. So that, and this was open, we were looking at as a target from below, right? We gapped above it. So now it becomes valid to come back and check it from above. So overnight volume point of control, high probability statistic. I'm not going to give them to you because I don't want to take the time. Overnight mid, high probability statistic, past performance not indicative of future results. You got to check it. And this. So this is our target for this short in the Trader Lab, subject to you vetting. And there's more. Let me just see what else is down here. This is also a target down here. And that's a higher time frame. It's the same as this, except a higher time frame. So this is called fractals, remember? So let's see the trade now. Let's watch this thing. Okay. And I take time with this because if you don't understand why, you don't need to see, I think the purpose of the Trader Lab in this stream is to help you understand market mechanics, how it works, why it does what it does, even though it's random, and how you might get an alignment using structured trades. These are structured trades, and they're available to all of you in the Trader Lab, as well as a community of like-minded traders that, everybody's there for one reason, to get better, to leverage their collective experience. We have traders in the Trader Lab, have been trading over 50 years, that they admit to anyway. So this is called VPOC migration. Remember, VPOC migration, short. What is this? VPOC migration. What might it be? How about another short? Let's label it. You'll see I'm process oriented, and it's really evolved out of system design, which is really conditional statements. So the conditional statement is like a schematic, and the setups, if you will, or structured trades are related to the context. They are not mechanical. And that's what's the hardest thing. Most of us are red light, green light, oriented when we start in this business, and it's all indicator based because that's what we think the business is. I'm going to assure you, again, only on my experience, not so much. Here's high volume retail. If we leave it, we can come back and check it. If it's still too high, where might we go? We may continue lower. Where is our target? Here. Let's watch. Now, again, so you understand there's more to this. So we're looking for the responsive selling. Okay, fine. Short, 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 short. I don't see a long yet, do you? And the other part of it is, how do you manage the trade? This is where your individual trade plan comes in. It is really a statistical process. It is not I want to catch all of it, mental, emotional wiring, triggering process. It's business, not gambling, unless you want to be a gambler. Then, like I say, casino gives you cocktails in the buffet. And if you're a high roller, maybe a ticket to go see Adele. Watch. VPOC migration, minutia. What it is measuring is this volume. So we're still moving down. Now, what we have to be conscious of is where is too low. And too low can happen anywhere and give us a counter rotation. This is the joy. So trade management is part of your process. And this is a part of understanding your plan statistically. Not mine, yours. Let's watch. VWAP mid. Now, we have a structured trade in the Trader Lab. Now, I'm going to tell you what it is. Let's assume we can agree that the direction of this thing is down, right? We see the developing volume point of control migrating lower. That is saying lower. In other words, the sellers are lowering the price. By the way, do you know who controls the price? The sellers. Sellers are lowering the price to entice the buyers. So they're lowering the price. We have a structured trade in the Trader Lab. Now, I'm going to point it out to you. It's not qualified because of the range. It is a structured trade. And I said I would show you all the trades. Now, it's not a trade that anybody in the Trader Lab, I hope, would take. But it is a structure that you need to understand. We have a structured trade called the VWAP to VPOC. Now, here's what's important about this. I know, what do I know? Stops are at VWAP and mid. Here's what else I know. Let me move this back a little bit so you can see what I know. Here's what I know. Watch. This is the high volume area. You can see the volume there, retail. Remember how shopping works. Consolidations, basically, when you rotate, this is the outside edge out here. In other words, too high, I'm not paying that. Too low. too high, and that's called a low volume node. And what creates it, so you know, I'm just going to take you back here. This is a consolidation, too high, too low, rotation. When I break out of it and the market runs, it doesn't chop. It doesn't auction. It just moves to a different area. That leaves low volume here. And in our definition of low volume means it didn't stop and pause and go too high, too low, too high. It just went, I'm out of here. That creates this space, and that creates low volume. That low volume now is out here. I'm going to label it just to keep us conscious of what's going on. And this is what the profile tells us. It's really telling us, where does the volume dry up? And here, let's just put it in there. And this is what I do. Now, obviously, in real time, you know, I'm just looking at this. I know what it is. When you're learning, and if these concepts resonate with you, I know this. The buyers dried up over here. The sellers ran away from this consolidation. And you know how consolidations work. Too low, too high. I'm out of here. High volume was here. We left it. I'm not paying that. Now we start down here, rotation, okay? Oh, too high. So that's my outside edge. Here's retail. Now, let me go back to VWAP to VPOC. We come outside, and this is a structured trade in the Trader Lab that's not qualified. Why? Range. But what does it tell us? Context and behavior. So if I'm sitting here, I know I can come out to this. So if I'm going for the higher time frame targets, subject to my plan, my stop, if I have runners, is out here. And you know how it feels emotionally when it comes all the way back and takes your runner out and you want to throw a shoe at the screen. That's something you have to vet in the sense of what aligns with your psychology. So let's watch. VPOC migration. Let's watch. This was too high. This might be too low. This now is retail. This is a warning Will Robinson moment. To go lower, I have to clear this because this might underline be saying too low. I'm going to label it. Let's watch. I know it's a lot of detail, right? But what I'm doing is I'm doing this in real time. As fast as the inputs come, I'm tracking. I'm not using an indicator. I'm just reading these guys. What are these buyers and sellers doing? You know, so VWAP to here, VWAP to here, moves up, warning Will Robinson moment. Here's why. If I come down here and I can't clear this, and I come above here, then squeeze. And my outside edge is here. So let's see what it does. I don't remember any of this, so, you know. See? To the outside edge. Watch. So here's what happens. Too low, shifts up here. Pull back, test here. Too low. Liquidity comes in the book. I can't cover all the pieces here, but I just want you to see how you might put pieces together. Now, when you see this, you don't know. Are they going to pull? They stay. I come up here. This is too low. Now I suspect the rotation if I clear that. Too high, too low. Too high, too low. Liquidity. Break. Where are the stops? VWAP, mid. Where's my outside edge? Out here. Okay? Outside edge. Now, microstructure. Retail price. There's the micro high volume. I'm at my outside edge. No clue. Let's look. Seller. This is a trigger. Now, watch. Now, I don't know what's going to happen, and I can't remember. This is pulling. This is concerning. But what we want to see here is if this micro, this is like going down the street to your convenience store. This consolidation has volume in it. There's my seller. Now I'm above here, so I have to be very careful because for all I know, the market's rejecting this, right? And the whole idea of the short could be off. So this is an area right here, and this is pulling. So that's disturbing. Let's watch it though. Too low. Too low. Let's watch. Liquidity. Let's watch. See? Is everybody tracking? Can you guys see behavior? No indicators, behavior. And I don't know what it's going to do. You know, I'm as clueless as everybody else. Not my job to predict. What I know is, based on the behavior, this is important to clear. This comes into the book. We check it again. Too low. Buyer. This comes into the book. Squeezeteria. Now this is up here. So I'm pushing outside of this area. So is everybody tracking so far? Can you see how this might work? So now let's come back. Liquidity gets added here. Now, right here, there's nothing here for me. Okay? Because I'm in the what's going on mode. I've crossed over the mid, the VWAP. I'm above the volume point of control. This is now two-sided trading. We have shifted at this time from directional movement to rotational movement. It is a separate plan in the Trader Lab. Are you guys tracking? Oh, by the way, I didn't say this was easy. But what makes it doable is not thinking, oh, I should get long here, I should get short here. That's what amateurs do. Professional traders say, where's my next setup? What is the condition of the market? Has it changed? Do I have a plan for this? What is my plan for this? Is this market going to go up now? I mean, are we done? What are we going to do? I don't know. This was too high. We got our rotation. We didn't take out our support level, which is the volume. We come back up. Where stops? Right above here. This comes into the book. So let's watch it. And this is where Market Pulse, I'm going to mention, and you know, I always have to say this, I'm not a fan, not of Market Pulse, but of indicators, because most traders are lazy and they don't learn how the market works. They let the indicator do the thinking. In my opinion, that's a recipe for a bad outcome, but that's just my opinion. Let's look at this. This is the delta and is measuring the buying in this leg. Okay, we're just going to say that for now. This is Market Pulse. And right here, Market Pulse and delta align. Right here, liquidity aligns. I'm at an outside edge. Now, what you don't know, and part of the joy of trading is, are we just going to keep going? Because we're in the casino business. We can't predict what comes out of the deck or how it works. If this is a short, let me show it to you. Then this is the target, and then potentially back to the other side. So let's see what it does. Now, if it's not in your plan, it's nothing, okay? It's just, gee, that's interesting. Watch the liquidity. This is called the liquidity marker. So it's showing me the ads, and you see the book. So that's one piece, okay? We have our Market Pulse right here, alignment. I'm going to take you into minutia now, and I hope you find this interesting. Now, these are not necessarily trades I can take. I mean, it's just not important to me. I just wait, for my trades. Whether I take this or not is not material to what you do. You can do anything you want if you take the time to understand the mechanics of the market and have structured trades. Once we cross mid VWAP and VPOC, there's a couple possibilities. We can keep going up, or we can get into rotational trading, two-sided. And I don't know which one until I get something that indicates back here. Now, if this is too low, we can come back to this area and repel off it and go higher. It's too low. Think VPOC migration. Or if it's not, and all we did was go into mean reversion, and I dropped a webinar out there on rotational trading. This is in the Trader Lab, so you guys know if you're just visiting for the first time. We basically discussed two kinds of plans. One is directional trading, which is what you saw early, and then it changes. And we don't know until hindsight. So let's get real. You don't know it's changed. And often you'll take a stop because you're trading door number 1, and now it's changed to door number 2. And if it changes, you're not going to be in alignment until after the fact. That's just, let's just be real here. There is no magic bullet. There is risk management and trade plan. That is the magic bullet. You come out here. So the possibility here is to come here, or give you a little hiccup, come back here and blast off. That's what I know. I don't know anything else. But let's look at the structured trade now. Micro. Now remember why I'm thinking this. Because I have targets below and I had responsive selling. I pushed outside of this layer. So that was my outside edge. I've pushed further out. It can do anything. Now I'm going to take you a little deeper. Watch. This is our liquidity. Here's micro high volume. This is the stop and iceberg detector. So selling iceberg. But here's what I have found. And this works for me. Now there's a lot of pieces here. So you got to be patient. Buy stops coming up. 14 stops. Thanks for playing. Broker sends you a gift basket. Into the liquidity, 3 buy stops. Where's my buyers? So, keep going, right, Lewis? Oh my goodness, it's going to the moon, Alice. Liquidity stays in the book. Buyers, buyers, buyers. They're not, this is staying in. These guys are getting absorbed. Okay? And don't forget, my market pulse is giving me a overbought thingy. It's like an oscillator, So for me, if I have, let's say a higher, and I do have a hierarchy of inputs, this is like the last piece. Everything else has to be in place before this is material. Otherwise, it's just noise and a distraction. That's why indicator-based traders overall, and it's again just an opinion from observation and personal experience, are just visiting. They don't last long enough to figure it out, what indicators are and aren't. But indicators have a place if you learn how the market works. It isn't the other way around, that indicators solve education on market. They're just kind of dumb, and you have to use your head, not just using random outputs of price and tweaking and think that you can create an ATM in the basement. I'm going to suggest that might be a little naive. So right here, okay? So, but yet, where's our trigger? Absorption, absorption. This is staying in the book. It's even getting heavier over here. So let's watch. See how it gets darker? That's adding. That is pressure. So you see the pieces come together. Micro high volume, seller. This now is too high, and we have alignment with the market pulse and everything else. The idea is to return here. It's called mean reversion. There's the mean. So if you get short here, if it fits your plan, basically you got to be looking at this. So let's watch. Pull back here. Is this too high? I wonder. Look at that. VPOC migration. So Short, if it's in your plan, I want to stress that. Microstructure, market pulse, sell, and you saw the trigger, back to here, under here, pull back to where? This. Is that now too high? VPOC migration. Too high. Potential trader lab, add, short, or trade management opportunity. Who knows? Watch. Retracement. To where? Too high. Too high. Seller. Trader lab. Trader lab. Too high. Target is here. Remember? Target. That's just a short sequence, okay, guys? Is everybody with me? And guys, if you can't follow this in the sense of trade it, it's okay. Your job is not to get all of these. Your job is to wait for your trade. If you took one trade today and you followed your plan, that's what this business is all about. It's not, catching every ripple in the market. It's not the real world. The real world is one trade at a time that you develop process for. The biggest obstacle, in my opinion, to being a professional career trader is understanding the context of the market. It is the most challenging part of this because it is multiple dimensional, if you will. In other words, short, short, short. What happens when we get two-sided? Different plan comes out of the drawer. Then if it continues and it changes back to directional, you're now in the directional plan. These targets, since the top of the stream, this is what I was trading towards, right? But when we crossed outside, I had to go into a mean reversion plan to come back to this. And then if we break below, all we did was rotate out and squeeze. And I don't know. I mean, I thought it would stop here, right? And by the way, when I say I think it would, I really should be saying I think it could, not that it would, because that means certainty. And I certainly don't have that. Not blessed with certainty. I am specifically blessed with randomness because that's the environment I operate in. I cannot be responsible for knowing. I am responsible for having a vetted trade plan and having the discipline to follow it. If I do that, I have the potential to survive the learning curve and build out the plan piece by piece. That's what the Trader Lab is about. And that's what the 60 PDFs I share of structured trades you can reverse engineer. Now, what's going to happen? I have no idea. So I don't worry about it. My job is not to predict. I have no clue. Now here, this is the first hour's low, okay? And right here, and nobody knows, by the way. So this is the first hour's low, and I'm on the short side. So for me, I only have short, okay? Now, let's look at some of this. I'm going to open it up. I'm going to get into minutia again. This is a high volume node. I'm now going to go into fractal with you. Now, subject to your plan, and remember, what is a plan? It is something that has a statistical edge. It is nothing more than that. By the way, this is absorption here. This is another algo that's in the market pulse. Now, I don't need this to see absorption. I have it here too. But this jumps out at me. So here's what I see. The market is short. This is delta. The market pulse. And here's the fallacy of indicators, by the way. You see this? This tells you to get long if you're using the market pulse. See? That's why indicators will throw you under the bus. because if you have to understand behavior. So when I see this buy in the market pulse, I have nothing to do with that, because what's the context? Down. So I can't pick the bottom of anything. I just go with the flow. So for me, if I'm short, I'm using structure to manage the trade. So structure, there's your high volume, there's your seller. If it stays under here, it's lovely. I come down here, I have market pulse buy. I also have absorption going on here. Okay? Market pulse buy. So where's the last place it was too high? It's there. So right here, now I'm going to show you some other stuff. I'm taking you down with the, I wouldn't call it a microscope, but we're getting there. Watch this right here. Let's put a box around this, mentally speaking. Remember how shopping works. Oh, it's on sale. I'm not paying that. Oh, it's on sale. I'm not paying that. Right here. Breakout. Buyer. Oh, what's this? Volume. Where is it? Here, let me show you. This is how they use Bookmap. And it's a piece. It's not a reason to get long, in my opinion. Now, if you have a vetted trade plan, you can knock yourself out with this, literally and figuratively. This is the high volume. There. See it? It's developing. This is basically where the volume is. Too high, too low. Grocery store. Down the street. Pint of ice cream, 8 o'clock Saturday night. Gonna watch the movie. Not a lot of volume takes place, but there are shoppers in there. And that's where the retail volume is. So what I'm looking for it to continue to go down, is for it to have its volume and push this way. Same as those migrating VPOCs. This is just down at a fractal. So you see the behavior. I'm looking for it to push off this volume. And then I would put my stop here. Okay? Is everybody tracking the micro? I just want to make sure. How are we doing in YouTube? I hope you're getting something out of this and you find this useful. So I'm showing you micro, how to narrate and potentially manage your trade. So right here is the volume. I wanted to push this way because then I know this is too high. Just like that was too high. Just like that was too high. See it there? See it there? See it there. Too high? Too high? See the sequence? Too low. And I don't know until after the fact. You know, hindsight, there you are. Now I know. Right here is too low. Now, what is the proof that it's too low, you're going to ask? The test. Is this really too low, high volume? If I don't break below this and I clear this, it's hasta la vista, see you later, alligator. Watch. See the change in behavior. So this is volume. Seller, come back and check it. Too high. There's your seller. Okay? Here, volume. Looking for this. I get the opposite. Uh-oh. Now what? This is too low. What do I get? My test. Buyer. So right there's your reversal. And for me, it is a exit. And I have this. Now, what about this one? Should I be exiting here? What do I have here? Volume, buyer, pullback. Let's look at the difference. Volume is here. Test. Uh-oh. And what do I get? Seller. So, you know, it's subject to how you manage your plan. And it's really up to you. I mean, you could be out of this thing here. Doesn't matter. Does it? We're never going to get all of it. You think you are. That's not the business of trading. That's FOMO. And that's greed and all those emotional states. Oh, I left some on the table. Really? So now we have our reversal, and let's see what happens now. Where's the stops? Let's stop for a second and think about this. Mid, VWAP, and potential to come back here. No way to know. This here, out here, is a potential outside edge. This is a micro structure, selling structure right here. You've seen this from the other side. But here's the problem. Stops at mid and VWAP. So write this down. Think like a retail trader. Don't act like one. You have to decide. Really, do you want to step in front of retail traders' stops, which are here? For me, no. I'm just going, okay, down leg is over. Now what? And I know it can come anywhere, to any of these high volume levels, like this one. It took it out. This is the next one. And always write this down. Look left. What's over here? Buy stops. It's a swing. What's over here? Buy stops. It's a swing. If I short here, I am stepping in front of the fuel. I can't sell this in my plan. I mean, you might, but I can't. Why? How many of you put your stops at the mid or the VWAP? How many of you automatically, you don't have to tell me, but I'm going to say I did early on in my career because I thought that was what we supposed to do. Oh, you sell the mid. You put your stops here. Do you think other retail traders are doing that? Well, since we know the majority of retail traders fail, and it's over a 90% failure rate, more than, and let's just say, of course, past performance, not indicative of future results. You got to do your own research, but let's assume maybe it's over there. What are they doing? Don't do what they do. Don't take this short. And look what comes in here. Liquidity, and it looks like a short. There is your seller. Isn't it look lovely? Here's your volume. And what does it do? It blows right through it. I can't sell this. I see it and I go, no. Because of why? Stops, swing, and potential to come back here. So let's look. VPOC migration. Watch. Now what's going on? Variable high volume node. Everything below is now too low. Great to know after the fact. This shifts down here. Let's label it variable high volume node. How am I doing on the clock? I'm trying to speed along. Believe it or not, I'm trying to rush. You probably go, really? Probably seen snails run faster, but if I don't give you the explanation, I don't think it's worth our time. What I'm doing is narrating participant behavior, and I'm showing you the narration based on the volume, which is what the volume profile is all about. What does volume say about price? Well, here's the high volume. In the store, if this price is too low, and I don't know right here, of course, I never know even if I think I know, so that's not part of it. Then if we reject it, we can come back to a previous price. Where is too low? In the microstructure, this is too low, okay? There's my buyers. This is my head fake sellers. I pull back. I got nothing here to lean on, really. I mean, this might be usable, but for me, it's not at the time because I'm looking for the stops to come out. So I'm not going to get long. I'm going to look and, I'm just waiting here now because I can't get short here. This is kind of a trap as I see it. This is, you get the liquidity, you get the seller, you get retail traders selling this thing, and then they pull. And that's like, gotcha. This shifts down. Retail. Watch. Now I have this. Let's look and see what happens here. VPOC migration. Is this too low? I don't know. VPOC migration. This now is too low. This now is retail. This is my outside edge. Let's watch. You notice a change in behavior. What does it do? Too low, VPOC migration. This is a long in the trader lab. Stop goes under here. This is your target to scale right here. Let's watch. Pullback, support, long in the trader lab. So you have the following. What's going on? Too low. VPOC migration. Long to where? Here. It was too high. Is it logical? VPOC migration. Pullback and test. Is this too low? Or are we going to come back here? Wish I knew the answer. Long in the trader lab. Too low. Stop under here. VPOC migration. Another potential long in the trader lab. Obstacle is still here, and there's stops over here. Let's watch. VPOC migration. Long in the trader lab. Long in the trader lab. To there. Long in the trader lab. To there. VPOC migration. Watch. Pullback. Test. VPOC migration. Resistance. Watch. Test. Test. So what do we have? Too low. Let me take you into micro. Now, I know this will probably make you guys nauseous, so I apologize for that. And I'm not suggesting you do it this way. I'm just showing you a way to read the market behavior with no indicators. I don't need an indicator if I can do this. And I take stop. By the way, stops, cost of production and overhead. I know we're emotionally attached. I get it. We feel it. I ask you, what does the casino feel? Now, by the way, this is the first hour high, right? And we had responsive selling, so we know there's buy stops here, don't we? And there's more, he says, and there's more. What was the target I showed you? Now, I have no clue if it's ever going to do anything. You know, this is this. Remember? Outside edge of a higher time frame. This is the target if we come out the top. So you'd be hanging out on the long side here, teeth chattering and everything else, going for this and then the extended target, subject to your plan. So let's just see it. And that's why I wanted to show you the price map, because these are on the price map before the RTH open. Any questions so far? I hope you're getting something out of this. Question, guys, how are we doing in YouTube? Are you getting something out of this? I hope you are. And and this is probably, you're going to go, I can't do that. I'm going to say, yes, you can. And here's the other thing. I tell you, I say I don't use indicators. I don't need an indicator. This is my indicator, the participant behavior. Indicators are outputs that are based on price, that are math-based outputs. They are not sensitive to the condition of the market and how the market behaved previously. This is what the auction is about, CLVN top hat is a composite low volume node. It is a higher time frame for all the volume going back to January 3rd, I think 2020. That's what this is. And this was an outside edge of a high time frame. So it was an outside edge. So on that basis, we could pop through here and keep going, or if we pop and come back inside, this is what you anticipate, this. And then there's other trades that's set up in the trader lab, which I'll talk about. But that's where it comes from. Does that make sense? Fred, the market has been here. Pricing in futures. you have to add the spread in. When you roll over, you use a back adjusted contract because when you roll the months, there's carrying charges, and you can have a spread between the current month and the next month over in a rollover. So we're adding that on to the price. So the volume stays constant. The price is changing. I hope that makes sense. Remember, futures. Does that make sense, Fred? So this is our outside edge. And now, guys, remember, I can't predict anything. I don't do that. That's somebody else's job to pick the high and the low. I spent too many years thinking that I could do that because basically when I started trading, I learned at the Chicago Mercantile Exchange classical bar charting, which is measured moves primarily, right? You know, triangles, pennants, head and shoulders, all that jazz. 50% retracement. And so that's kind of how that all evolved. So I always thought trading was predicting. So I don't predict anything. I figured out that, you know, my guess is as good as anybody's. And the problem was that you get it right sometimes, just like gamblers win. So they think they have a viable process. They don't. And again, in my opinion, you know, I always say, go to casino, entertain yourself. Don't do that here. This is business. Assuming you just aren't a gambler. You know, that's up to you. So let's look at this thing. So we come up to the location. Who knows? So location. You could have been out. For me, I just get out ahead of the thing. I don't care. Why should I care? Now there's more. I have to give you something else here that I forgot. I think I did. Okay. So you know we have our longs, right? We have a structured trade in the Trader Lab called the IB continuation trade. It's right here. I forget these things, you know, because there's so many things. Now, when you now the target coming up was this, right? One of them, to take the stops out, buy stops, all the shorts, guys hanging out short, you know, get them. And then I'm going for the next target because I don't know, you know. So here, now let's assume if I wasn't long, how would I get long? This right here is a structured trade in the Trader Lab. Let me show it to you. Now, the way this works is, and this is called the IB, continuation trade. You guys can download, there's 60 PDFs in the Trader Lab if you're interested in what this is all about. And by the way, and also, let's be real about this. You have to develop a skill to do this. You gotta, and just think about high-performing athletes, anyone who's at a competitive level in anything. They don't just walk out on the court and shoot three-pointers like Michael Jordan. You know, they have hours of practice, coaching, films. They have structured plays. All of that is what makes performance happen. That's what it takes in this business. It's a building process, and I underline the word process because trading is process-driven in a random environment. Blackjack in the casino is process-driven in a random environment. That's the business of trading. You don't have to accept it, but I'm going to say I had a whole different perspective on trading for many years until I kind of got the light bulb went off. And I'll tell you, the light bulb was kind of dim early on because I was doing what other traders do. And I thought it was the right thing. And the problem we have doing what might not be the right thing is we believe it is the right thing. What does it take for you to change a belief? You think it's persistence, right? I'll get it. I just got to tune this, tweak that, maybe another time frame. Let me put a couple more indicators on this. And our subliminal desire is to squeeze risk out with more indicators, more time frames, because we don't want the pain of loss. We don't want to be eaten by the saber-toothed tiger. In this business, instead of running away from the fire, you're running towards the fire. And your wiring is actually, you're not wired to do that. So you've got all these emotional states and chemicals and survival instincts working against you. You need to learn about that. So right here is the IB continuation structured trade. And again, past performance not indicative of future results. So let's take a look at this. We break through the high. There's your buy stops. Thanks for playing. Remember, The broker's going to send you the gift basket. We pull back to the IB. Now let's look at the trade. Right here is volume, variable high volume node. Remember, let's go back to the open. Let's come back to the open. Let's come back to the open. This there was too high. So I know this is too high, right where this is labeled, and I know this is my area to look for a long. So when I first break out of the IB, which is here, I'm looking for a pullback to here and to a long. So let's look, try to get over here with this thing. So this is where I'm looking. I have this. If I'm scaling, depending on the number of runners, I'm scaling here because I want to trade into the stops in case all we do is squeeze and fall back in, right? If I don't do that, whatever happens, happens. If I come outside, I'm going for my next target. So here, let me open it up. So here's my buyers, my stops. Here's my volume. Chop, 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 microstructure, break high, pull back and test the volume. Let's watch. Trader Lab, structured trade, long, okay? Now, and what's our target? This, okay? So you kind of see the IB continuation trade. Any questions on it? Yeah, Najee, I think I answered the question. All-time highs theoretically have not been taken out in futures. I will say that I'm getting the question about all-time highs. You just got to go with the flow. In other words, all-time high gets taken out. At some point, we're going to come back in the other direction. We have a lot of poor structure under us, and I anticipate, and it's not, it doesn't matter to me. You know, I mean, that doesn't matter. I don't really think in that. I think in the here and now because this is where I'm trading in this time frame. But all this is going to get repaired. We're going to come back down. When, how, if, not my job. So I don't think about it. So right here, this is the target. So I'm flat, you know. Or let me give you the or you're going, I don't know. Which is probably even better. Why is this the top? I don't know. Is this the top? Well, let's look at trade management here. Don't forget, you got your long here. Let's look at microstructure for trade management. And these are not recommendations. I'm just going to show you how to follow the yellow brick road. So you got your long, right? This is a structured trade right here. Long, stop under here or further out, up to you. Microstructure, see the little volume, break high. Does this look like VPOC migration to you in micro? Buyer, microstructure, VPOC migration, if you want to think of it. Volume, break high, test right there, too low, break high, volume, break high, volume, micro, VPOC migration. Micro, VPOC migration. VPOC migration, but it's not a VPOC. Can you guys see what a fractal is? YouTubers? Do you see trading in fractals? I can read this because it speaks. The volume in here is the same. Think Russian dolls. This is how you kind of get this. You know what a Russian doll is. Well, the low volume node here in the ultimate high time frame is the same as this low volume in the developing time frame. The variable high volume nodes I've been talking about, where the VPOC or yellow line migrates, are the same as this, except it's more microstructure, same behavior. Russian doll. So if you understand the behavior and you can think in fractals, top down, bottom up, at times you can read it And if you can read it, you can dance with it. This is language of the market. I'm not using any indicators. This is very timely for me. I'm not waiting for some backwards looking anything. I can see what's happening here. And when I see it, then I know this is too low. Right here, it's too low. Micro, too low. Buyer. Right here, too low. Buyer. You could see it. Let me take this off of here. I'll just clean it up a little bit for you. Hope you're getting something out of this. By the way, if you're in YouTube, if you find this useful or at least educational and maybe even different, please give a thumb up. Down in the bottom somewhere, there's a thumb place. Put your fingerprint in there, but I won't tell anybody. High volume, buyer, test, too low. There's your buyers. Too low. So too low, test, buyer, volume, too low, buyer, test. See what I'm doing? Buyer, who knows? Buyer, too low, volume, buyer, too low, watch, volume, seller, too high? Question mark, he says. What about this? Took it out. Trade over, subject to how you want to manage your trade. Are you guys getting something out of this? Please give a thumb up if you're in YouTube and if you want this stream to continue. Whether Trader Lab stays and continues is really up to participants in the Trader Lab and thumbs. So we need your thumb. Throw a thumb in there. And I have a lot more I can share with you guys, but I'm very limited on time. I have 9 minutes left. So if you have final questions, there's more trades in the Trader Lab, but I think this is a reasonable overview. I try to cover some different stuff. I've been giving you the higher time frame, right? Let's see what else we got here. I haven't seen any of this, so what's going on? Okay, let me show you this. Now, for me, I'm not suggesting somebody fade this, but let's look at a selling structure. Now, what this is about, what I'm going to share with you here, I'm getting advanced. And I don't want you guys to think you should not do this. You should take the trend trades or the mean reversion trades, two different trade plans, because the market shifts from directional to rotational, or it could go rotational and shift to directional, and intraday it could do it back and forth, and you're always going to be out of step with it until you recognize it, and that's conditional statements. And in the Trader Lab, it's done like this. If this, then that. If not, then what? If this, then that. If not, then what? If this is too high and I get a reversal, so if this, and I go through it, that's fine. If it's too high and I get a selling structure, so if this is too high, then that. Then what? Where's the volume? Too high? Where's the volume? Too high? Seller. You see the change in behavior? Buyer. Where's the seller? Buyer. There's a seller. No. Seller. Change in behavior. Too high. Seller. Too high. Oh my goodness, we're out of here. Too high. Let's go back to the structure. Let's look at the structure. Too high. There's the test. Seller. Too high. There's the test. Seller. Any doubt? Now, where's the test? There. There. So where's your volume? Here? Too high. Where's the volume? Here. Too high. Where's the volume? Too high. There. Too high. Potential short. If you want to be, do you feel lucky, as Dirty Harry would say? Because this is counter trend. And where are you trying to go? Back here. There's stops under this. So you'd be taking a short here if you have a counter trend plan. Or you sit back and you order your pizza. Because if you don't have an edge, you're going to pay. into this, and then potential back here. If you can't come back here, then potential to come back here. Let's watch. Outside edge, low volume node. Now, this could be a long, but here's what you got to be conscious of. This is too high. So do you take a long, or do you use this to get short, or do you just put it in park and put the Lamborghini back in the garage? Up to you. See what's going on here now? And where do we come back? Too high. There was your seller. Where do we come back? Too high. Too high. No clue. There's your seller. Where's the volume? Here. Here's your test. Potential short back to here. Stop goes here. It's all up to you. Not a trade recommendation. Anything could happen. You could take it out. So, subject to your plan. Final questions. And by the way, if you haven't taken advantage of it, and please give a thumb up on the way out if you're in YouTube. It's very helpful. And we have a bond auction coming up. Thanks, Slaughterozzi. And that can create hiccups and volatility. If you haven't visited the Trader Lab, you're all welcome. There's a link in the bottom of YouTube. You don't have to be a Bookmap subscriber now, ever, never, and Bookmap will never solicit you. You're welcome to visit the lab. There's 60 PDFs of structured trades. Some of these trades I'm talking about, and there's others. There's more advanced stuff, but to give you the idea, and I'm not a vendor. There's no trading course. I didn't put these together. Some of these are from 2020. I was sharing ideas, 2021, and here's a reason for some of these. Some of these are live trades, and some of these I went back after the fact, and just grabbed a screenshot to explain what was going on. Some of these things you're going to see in here were experimental. I was working with developers at Bookmap and, jettisoned some of it. So you have to vet these for yourself, but you can kind of look at these and it might give you some insight as far as why, because I think it's really important to understand why. When you live in the world of maybe, why is important because it's always going to be maybe. So maybe it's good to know why and why maybe. That's pretty much it. That is what the Trader Lab is about. This is what it's built on. Auction market theory, how the market works, why it does what it does. Also helping traders develop trade plans so they understand why retail traders fail and why the failure rate is so high. Try not to do what they do. They don't stay in the business. There's a reason. You might be able to learn why and maybe change the course you're on if you're not successful. On the other side of that, if you are a successful, consistent trader, and here, check, 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 check. We're back up. Yeah, we are, I think. Are you guys able to hear me? Internet went down here in Costa Rica. How we doing? Maybe. Yeah, okay, guys. Sorry about that. The monkeys grabbed the, you know how it is. Monkeys jumped on the wire, the cable here, and I dropped. So anyway, hopefully, if you guys can still hear me, please give a thumb up in YouTube on the way out. Hope you got something out of the stream. By the way, this stream is available exclusively to Trader Lab participants to reverse engineer, review. Are we still cooking here? What are we doing here? Back to the high and going. So, please give a thumb up. There's a link in the bottom of YouTube. And our internet's going back up and down again. So please click the like button in YouTube. You can review the stream if you got something from it. Visit the Trader Lab. You can download the 60 PDFs, plus a library of webinars is available to you to review, so you can get an understanding of this. Some of it up to 4 hours long of real-time narration, so you can see how this develops in real time. If you're inclined. Thanks again for visiting the Trader Lab. Appreciate you visiting today. Sorry for some technical challenges, but I am in Costa Rica. Catch you guys tomorrow. Take care, everybody. And thanks again for visiting the Trader Lab. Truly appreciate it.